following content is a technical analysis on the Nasdaq 100 futures, one of the largest components to the non-financials and technology sector. And as I have persistently amplified the significance of this pivotal turning point in my preceding videos, I am compelled to assert that we have now encountered an even more captivating and profound juncture since my last update, most notably the remarkable inflection points that have manifested themselves through the bond and treasury markets, with the potential emergence of a resounding risk-off sentiment reverberating across the junk bond markets. And just again, to help clarify, it is absolutely crucial to bear in mind that the stock market as a whole is just really a mere spit in the ocean amidst the vast expansion of the entire financial ocean, and within the bond markets, acting as really the nucleus of the entire global financial system, which command unparalleled prominence and indispensability. And what has significantly changed here was this primary reactionary downtrend line reactionary high off the reactionary highs of November 2021 there. What I'll do before I zoom into that structure is the new primary reactionary high uptrend line coded here in yellow. I call it the benefit of the doubt primary reactionary high downtrend line that just cuts right through the peak of the top of that primary reactionary high there now. And this is what I see here. With some of the key updated inflection points that I had is we had this primary reactionary high trend line that I never even moved here. And what had happened was we popped that level. And as I favored slightly in that previous video, we ended up back testing it 1, 2, 3 days, had a nice clean, looked like we put in a doji star setup, got rejected pretty impulsively. And what happened that next day is we ended up opening up and rallied right amongst it and got rejected impulsively once again, right amongst that key inflection point, put in a nice clean divergent high right amongst this key level. And with that, a significant counter trend or snapback rally, we put in a nice clean divergent high. Near term RSI negative and bearish divergences now, whereas we had this symmetrical triangle looking pattern and we snapped it. We ended up not closing solidly, where we ended up bouncing right amongst this key 15-130-26 price support, a new key inflection point that I have here, and we ended up getting rejected impulsively off that primary reactionary high downtrend line. I've added a new key at the beginning of the reactionary lows off of May, reactionary uptrend line. Plenty of validation to help strengthen that validation. And there it is right there. Nice, clean, benefit of the doubt, reactionary uptrend line. And it is being snapped as of now. Right now, all traders, eyes, institutions, algorithms, machines, they're going to be looking at this 15-130-26 price support. Whether bull traders and or long traders step in now and heavily defend this key inflection point to retest the two primary reactionary high downtrend lines off the 2021 highs, all-time high reactionary highs there. Whereas it needs to retest to pour health back into some of these key momentum indicators, specifically the relative strength index, on a big breakout, solid daily candle close, move right back above, maybe even a potential back test, and re-challenge that benefit of a doubt uptrend line. Whereas we had that reactionary uptrend line really signified and back tested, retested the bud in there, and then ultimately, like I've continued to say, the 786 fibs retracement, we ended up getting rejected right off of it. So again, if you're a short seller and you've continued to watch my videos here, and you have continued to watch the updates on this Nasdaq 100 future trade, again, I have continued to scale in. So you are absolutely in the green on those short trade setups as of now. And the entire move has been solidly good for 2% there, especially if you're leveraged. That is a pretty substantial move for an entire index across with a basket of over 100 companies inside of that portfolio. Again, bull traders, long traders, they needed to burn off these divergences. They need to have a nice counter trend rally and retest this primary trading range. The primary trading range needs to be broken right back into to potentially burn off some of these waning momentum indicators on a move to the upside. Short sellers, bear traders tomorrow, they want to see this complete breakdown. They want to see a nice sell-off, maybe even a potential back test amongst this key primary uptrend line once again, and then an official rejection. Especially, again, all eyes are going to be on that 15-130 price support. And then ultimately, I think where the big move is going to start is off of that key 14,871.48 price support there. And if short sellers can continue the strength in the downward movement spiral to the downside, that is going to be the big level to watch, I think. I highly would put significant odds that there's a ton of stops, forced liquidations, and margin calls that'll go off right there. And then a big move, a real quick move, I believe, would be a much larger wave of selling down to the 618 fibs retracement, coinciding with that 14,439.97 price support, with the 50-day moving average hovering it up above there. Zooming you back out here, where I had favored a nice counter trend snapback rally amongst that key inflection point, where it was rejected pretty impulsively there, where we put in that nice clean divergent high, and now we have confirmed RSI negative bearish divergence right amongst that key inflection point. And now within all three technical momentum indicators in the near term here, where we have these zero line thresholds that could be retested and back tested for a key inflection point with an already confirmed crossover on the moving average convergence, and then slight some ways to go down for the oscillator histogram right back down to that range. Call it a triple line of support with the 50-day moving average hovering in down below there. And that's going to be a big key level to watch there. If we snap that level, if we take that level out, I would only suspect a much profound inflection point where some of the mainstream pundits will start to fearmonger in a bear market rally that ensued. And this was all a big hype for the meltdown, for a breakdown in the overall stock market. With technology as the biggest sector to the S&P 500, if Apple, Microsoft, Google, and some of the biggest components of the technology sector go, big technology goes, the rest of the market goes with it. Let's dive right into the bond and treasury, U.S. treasury markets, starting with the U.S. 10-year treasury here, where we have this primary reactionary uptrend line off the 2020 September reactionary lows with a multitude of reactionary lows to help strengthen its validation. And there are some key levels that were taken out here, including the 3918 price resistance there. And again, as far as that is a pretty big move here, we've completely snapped that level. We've popped that level. And as yields surge to the upside, you have bonds selling off violently, which will put exceedingly more amount of pressure on some of these technology sector. We'll take you out to the junk markets and just off a key inflection point here. High yield bond ETF here off the daily interval. And that is a big level to watch right here, right off the primary reactionary lows off this September 2022, multitude of reactionary lows right across the board here. And it is really a fourth in inches moment. Bond bear traders, short sellers, they want to see a solid daily candle close below that primary reactionary uptrend line, and then a more profound move down to that 89.17, a price support for a 1.2% drop, and just not a whole ton of support on a big move down to 86.27. When the junk bond markets go, it is a risk off, a complete entirely halt, and usually before a broad market sell-off, junk bonds are always usually the first to go.